Welcome again to Easy Tutorial Concepts. Now today we'll be looking at a very simple topic in taxation. You know, many times you've always examined students on this particular topic that has to do with taxation of trusts, settlements and estates. Now, how do we tax trust, settlement and estates? The calculation is very simple. So it's just a matter of you just know this simple step and you are good to go. And once you see this in exam, I think this one is a walkover already. So let's look at the May 2024 past question 3b, May 2024. So though we have to start with this because this will set a foundation for us to solve other technical questions in this particular topic. Meanwhile, there are not so much technical questions in this topic, but I think there are one or two information in some other questions that are not in this one that also help us to solve more complex questions. So if you look at the question, Alhaji Yanko Abdullahi was a successful businessman in Kano before he died. He is survived by two children, namely Yahya and Binta. The trust was created for the benefit of his two children. The record of the trustee for the year ended 31st December reveal the following information. Okay, we have rent. I think this is just the question. Rent 2.4 million, profit from trading activities 32.1, just like interest received, gross, other income, additional information provided. Yahya is entitled to a fixed annuity of 148,000 per annum. Allowances for expenses of the trustee amounted to 62,000 naira. Then I also have number 3, capital allowance agreed with the revenue amounted to 1,260,000. Then we have trustee remuneration. We have a fixed as 25,000 per annum. Then we also have the variable, which is 2% of computed income. I think this one place we have a little kind of adjustment, you understand? Because now the computed income is not known, or should we say, for you to get the computed income, you should have deducted the variable trustee remuneration. So if you don't know the value of the variable trustee remuneration, then how is it possible to get the computed income? But this is another very simple application will absorb in this work, so as to enable us to get through without stress. So when we get to that place, I will explain to us what you will do to get the variable trustee remuneration. So without wasting much time, we look at the requirements. Okay, trust has made a provision of 100,000 as 60% of distributable income is to be shared between Yahya and Binta. These are the beneficiaries, Yahya and Binta, in the ratio of 55:45 respectively. Compute the income of the trust accessible to tax in the hands of trustee. So in fact, we are not told to compute the income that is due to each beneficiary. If you're told to calculate the amount that will be due to each beneficiary, maybe Yahya and Binta, then after solving the total distributable income, we'll now go to their individual calculation. But in this case, it's very straightforward. Just calculate the distributable amount that will be shared between Yahya and Bello. The distributable amount or the amount that will be left in the hands of the trustee. So the first thing you bring the name of the trust down. We can say the name of the person is, I think, Alhaji what? Let's move upward. Alhaji Yanko Abdullahi. So you can say Alhaji Yanko Abdullahi Trust. Abdullahi Trust. Okay, so that's for that. Then what's the requirement? We are told to, let's go to the requirements. To compute the income. So we write computation of income. In the hands of trustee. for which assessment year. So you flip through the question, you see the what's the base of assessment here. So this will be on preceding year basis. So it will be 2022 for year 2022 assessment 2022. Okay. So first thing you bring down, please, you should know that you have your naira sign. I think we should be conversant with that by now. You have your naira sign. So naira sign. Okay. Then you bring the income down. Okay. Rent, income, gross rent, income, rent, income, gross. What's the amount? 2.4 million naira. Okay, that's the first thing you record. Then the next thing, there's profits from trading activities. How much is it? So I always advise, when you see profit from trading activities, please treat it with first naira sign, because a capital allowance will be offset from this particular amount. You have to offset capital allowance from the trading activities. So whichever way it comes in any question, if you see profit from trading activities first, then you see then probably there must be capital allowance. You will deduct the capital allowance from that profit of the trading activities first, then so that becomes your income, your net income from the trading activities. So let's bring the amount down. For profit from trading activities, yes, 32,160,800. Okay. Then the next thing, you deduct your capital allowance. So look at the additional information, you see the capital allowance there. Capital allowance is 1,260,000. Okay. So by the time you deduct this figure, you should have let me just copy this to my calculator. Okay, minus the capital allowance, 1,260,000. So that will give us 30,900,800. All right. So that becomes the amount you record here. So that is for that. Then you move to the next income. The next income there is interest received. Just put another line there. Interest received. Interest received gross. How much is it? Interest received, the amount is 840,000. Okay. Alright. Let's just take this extra. Next is other income. Other income will have 630,500. So I think it's all the income. So you add together, add all of them together to get the total income. What becomes our total income? We add 2.4. So let's bring calculator. So we already have this figure here, plus 2.4 million, which is the rent income. Then this 13,900 has been added already. 800 plus 840. 840,000 plus 630,500. Total is 30. We just copy it from the calculator. 34 million. So that total income here is there. Okay? So these are total income. Then the next thing, you move to your expenses. So all the expenses of the trustee, bring them down, which are very simple. So the first thing we have here is the first thing we have here is additional information number 1. Yaya is entitled to fixed annuity. Okay, Yaya is entitled to a fixed annuity of 100 48,000 per annum. So you say fixed annuity and just put bracket there, yeah, so that in case you are preparing for the beneficiary, you know who, you know all the money that yeah is entitled to. So how much is the annuity? 148,000 naira. So next, allowances for uh, expenses for the trustee amounted to how much? So just write allowance or allowable expenses. Allowance, allowance expenses, allowance expenses. How much? 62,000 naira. Okay, so let's continue. Capital allowance, we've stated that already. Trustee remuneration, trust deed. Okay, fixed is 25,000 per annum. So you write fixed trustee remuneration. Trustee remuneration. How much? 25,000. Now, in other questions, this is where you should be careful. I think there's one diet, I don't know, but I think we're going to solve that particular question. They have trust, two trustee. So if we say the trustee remuneration trust deed, or so let's say they have two trusts rather, they have two trusts. So in those two trusts, if they are paying trustee remuneration of 25,000 naira per trust, meaning for the two trusts, it will be 25,000 naira times two. You understand? So you look at the question very well for some of those key things that they might use to trick somebody. So but for this one, we are told from the beginning, if you look at the question very well, it said a trust was created. A trust. To solve that other question, you still understand. So this one is very simple. Very simple. That's why in this series of taxation, we are starting with trustee, then we move to personal income tax, which we've done in our previous video. Please do it to subscribe to this channel if you are gaining value for your time. Okay, so these are fixed trustee remuneration. Then next, variable trustee remuneration. How do we solve the variable trustee remuneration? Now, variable trustee remuneration, we are told it should be 2% of computed income. This is a very simple logic. The computed income is this total income, the total income here minus the total expenses inclusive of the variable trustee remuneration. But now that the variable trustee remuneration is not known, or should I say the computed income is not known, and we are told that the variable trustee remuneration should be 2% of computed income. And so it means therefore that for us to arrive at computed income, we still need to deduct variable trustee remuneration. Hence, that becomes that's to say the 2% that we want to calculate is also inclusive in the computed income. So in such case, it will not be 2%, now it will be 2 divided by 102 because the 2%, this variable trustee, is still an expenses to arrive at the computed income. If they had said that the variable trustee remuneration is 2% of total income, very simple, you just come and pick that figure, it will be 2 over 100. But we are told it is 2% of computed income. Moreover, the computed income is not known. In fact, for us to get the computed income, this variable trustee remuneration and other expenses have to be deducted first. But we don't know the figure for variable trustee remuneration. Hence, for us to get that very well, so we have to include the percentage of the variable trustee remuneration inside the total 100%. That becomes 2 over 102. And that we say times, let's take this up to see if we can conserve space here. So this is always the case when we have stuff like this. And remember that this calculation always come, this variable and these expenses or the computed income always come, the computed income comes before your discretionary payment. So you must have solved for this one first before you move. When you see discretionary payment, no, this is the last thing. So let's move to, so what do we do now to get the amount of the what we used to calculate the variable trustee remuneration? So 2 over 102 times the total income here, which is 34 million 771,300 minus, let's reduce this, minus, okay, minus, let me just take it closer, the total expenses first. Since this one is not known, that's the reason why I'm using 102 minus just these three expenses, 148, 62, and 25. Let's bring a calculator. 160, 148 plus 1 plus 62 plus 25. That will give us 235,000. Okay, so minus 235,000. 235,000. 235. Okay, now let's work that here. 2 divide 102, okay, equal to times, okay, we've not deducted that first two. Let's just work that. 3 what? Oh, sorry. 34,771,300 minus 235,000. Okay, then times 2, divide by 102, give us 67,182. Okay, 67,182. So total of all the expenses. Now you add 677,182 plus okay, all the total of the expenses. Now I think this 3 gives us 235 plus this 235,000. That will give us 912. Okay, 912,182. So you deduct this now from the total income to get your computed income. Now I bet you if you take 2% of this computed income, normal 2%, 2 over 100 of this computed income, it will give you this 677,182. So this is some of the small adjustments we do. This is also common in the financial reporting. No markup and markdown. These are very common things we do. You understand? So computed income. Computed income. So we deduct. Let's just take it from this place, minus 34,771,300. So that will give us 33,859. 118. Alright. Okay, so the next thing now is to subtract your discretionary payment. That should always be the last thing. X, there is maybe frank investment income like dividends, and that will be maybe you deduct that from the income in the hands of trustee at the end of the day, if there is any. So, but that should not be an expense to be offset here. So, but in terms of expenses, many times it's a discretionary payment that is the last thing there after your computed income. So, you bring your discretionary payment. How much? You're told that discretionary payment first has made for payment of 150,000 naira as discretionary payment. Okay, so let's work that. 150,000 naira discretionary payment. Alright. Okay, so of the children, so that would be 300,000. 150,000 times 2 of them now. 150,000 times 2 of them. That's Yaya and Binta. That would give us 300,000. Okay. So the dots, let's see. Okay, so when you deduct, you have how much left? Let's use calculator here. 33,859. Sorry, 33,859 33,859,118. 33,859 minus 300,000 will give us 33. So this will be the distributable income. Distributable income. Just copy, then paste here. Alright. So we are told that to look for the income in the hand. So this is distributable income, and we are told here that 60% of distributable income is to be shared to Yaya and Bello. So let's distributed to distributable to beneficiaries. We are giving them 60% of the entire amount. So take note. Then the remaining 60% will be retained in the hands of the trustee. 60% of okay. They have the figure. Then let's work that. There's our calculator. 60% of think of this figure now, yes, times 0.6. So that will give us 20 million for okay, let's copy what approximately that's 471. Okay, so 471. So when you deduct this amount from the total distributable income, then the amount left is now the income in the hands of the trustee. The income in the hand of the trustee. So that becomes your final answer. So income in the hands of the trustee. So please do well to subscribe to the channel and ensure you turn on the notification bell to encourage us to do more valuable video like this. By the time we deduct, we have let's see. Okay, sorry. Let's say 30. What? Let me just copy. Sometimes it can be tiring to type. Copy, paste, minus. Let's see. Copy this. Permit me to copy. Please don't copy in the examination all. So let's paste here. Okay. So the answer is 13,423,647. So this becomes the amount accessible in the hands of the trustee. So that's the end of this solution. Thank you for watching, and we'll solve more questions on this topic, complex questions, to buttress your understanding. Thank you, and God bless you.